What if the American economy is not slowing down, but shifting power, wealth, and opportunity away from the middle class and into the hands of a select few? In the past year, U.S. GDP growth barely kept pace. Inflation remained elevated, trade deficits exploded, wealth concentrated at the top, yet luxury real estate is booming. Family offices are expanding globally, and billionaires thrive. This isn't random, it's structural. Welcome to Hidden Wealth Files. Let's start with the numbers. In 2025, U.S. GDP grew 2.2, slowing from 2.8 in 2024. The fourth quarter saw just 1.4 annualized growth, well below expectations. Consumer inflation stayed elevated at 2.9 PCE, higher than Fed targets. The U.S. trade deficit leapt to $70.3 billion in December. These numbers tell a story. Growth is slowing, costs are rising, wealth creation is uneven. The average American feels this in their wallet. Credit cards maxed out, housing affordability eroding savings, losing purchasing power, and yet some of the richest investors are seeing their portfolios explode. Despite the economy's slowdown, U.S. household wealth hit a record high in 2026, an astonishing $180 trillion, driven largely by investments in big tech. Here's the twist. Most of that wealth is not in cash, it's in stocks, real estate, tech companies, private holdings, and it's concentrated. In fact, the U.S. has 924 billionaires, more than any other country in the world. And while most Americans struggle with debt, the richest sit on assets that benefit from inflation, not suffer from it. That's not luck, that's leverage. If billionaires are the visible wealth holders, then family offices are the invisible architects. A 2026 global survey found that over 333 family offices around the world now manage wealth totaling billions each, with sophisticated strategies to preserve and grow assets generation after generation. These are not traditional banks. They are private wealth engines. They manage billions in trust, optimize for taxes, allocate to AI and infrastructure, strategize succession. 65 of family offices plan to prioritize AI investments in 2026. Even while the broader economy slows, they see opportunities others don't. And it's not just the ultra-rich abroad. North America is a hub for this expansion. Family offices are rising faster than traditional private banks can keep up. This is where true wealth lives today. Not in Wall Street headlines, not in government stats, but in private networks and invisible structures. Let's look at real cases, not just theory. Microsoft and AI. Wealth companies like Microsoft and NVIDIA saw explosive value growth due to the AI boom, creating massive equity gains for those invested early. Individuals who held these stocks years ago now have compounded wealth most Americans can only dream of. Generational real estate transfer. According to market research, over $2.4 trillion in luxury U.S. real estate wealth is set to be inherited by Gen X and millennials over the next decade. That's more wealth moving forward than entire economies can generate in a year. We are literally watching old money, new tech wealth equals power consolidation. But this is the part most people don't see. These transfers happen through trust offices and legal structures invisible to the public. Let's break down the secret sauce. 1. Structural intelligence. They don't earn wages, they architect wealth systems. 2. Asset positioning. They buy assets that outpace inflation. 3. Governance systems. While most families lose wealth by the next generation, 70 fail. The elites survive because they institutionalize succession education and planning. That means trusts, multi-jurisdiction portfolios. legal tax optimization, family councils. This is why wealth perpetuates for centuries. Now, the controversial part, when wealth becomes this concentrated, economically powerful groups change policy, not through headlines, but through access, influence, and capital allocation. This leads to policies that favor capital gains, tax frameworks that benefit assets, regulatory environments that protect wealth, and while the average worker fights inflation at the grocery store, the elite hedge against it through real assets and global diversification. This structural divergence isn't accidental, it's systemic. So what does this mean for you? Here's the brutal truth. Income doesn't make you wealthy. Assets make you wealthy. Structures sustain wealth. Governance preserves it. And here's how you can begin to adapt. Educate financial literacy. Protect assets legally. Understand market cycles and macro patterns. Study how wealth moves, not how it's advertised. Because while wealth can be concentrated, knowledge is the only leverage everyone can cultivate. The illusion isn't that wealth exists. The illusion is that it's equally accessible. It isn't. It's engineered by design, by strategy, by structure. But that doesn't mean you can't understand it, because once you see the invisible mechanisms, you begin to see power for what it is and for what it can become. This is Hidden Wealth Files, and the true system never announces itself, it builds quietly. Within these hidden files, patterns of wealth emerge. The key is in the details. Subscribe now.